Hello, everyone. Happy Friday to you guys. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to the last edition for the week as we take another fresh new look at the financial market today. Before we kickstart the session, let's quickly do our daily routine, like by confirming that we are all on the same page. So, if you can see my screen and you can hear my voice loud and clear without distortions, please let me know in the comment section. Just type in hi, and this is enough for me to confirm that we are all on the same page. So let's see what we have here. Please, I'll really appreciate your feedback so we can kickstart the session as early as possible. All right, thank you very much, guys. I'm loving the positive energy in the year. All right, I see your comments. HDR18, good morning to you. Thank you very much. 8433908. Opepalo, good morning to you. Lever 625, good morning. Asan Lok, Srinil, okay, Najmal, Neptune. All right, guys, this is wonderful. Okay, Mahonella, good morning to you. Hey, Carrie, how are you doing today? Okay, Opebalo says loud and clear. Julian RNX, okay, Mohammed87, thank you very much. I see your comment here also, 863978183. Thank you very much. All right, that is great. That is great. Motabayana. Okay, all right, Bella G, good morning. All right, this is beautiful and great. I'm so pumped up this morning. I'm loving the energy in the here right now. So, thank you very much, guys. I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all once again to yet another installment of our daily series of the X Trend Speed Live. And today promises to be an exciting and interesting one. As you all know, we are heading into the last trading day of the week, which is always peculiar with some psychological expectations, as majority in the market will want to be rounding off on their trading activities ahead of the weekend, and this usually has its own impact in the market, reflecting on the chart as price action doing a reversal from the prior leading price action as majority start closing in some of their positions, taking in some profits off the chart, rounding off ahead of the weekend. There's another thing that is going to be very evident in the market today, which I would like to call our attention today, as the potential dynamic in today's trading session, which are expected to be influenced by the closure of the US markets yesterday due to the public holiday, remember, and the resumption of trading today is likely going to be bringing increased volatility and heightened market participation. So we can anticipate a surge in trading activity today as market participants return to their desk. Public holidays often lead to pent-up demand and accumulation of market orders, resulting in larger than usual trading volumes. And as a result of this, and because of the expectation that is likely going to be large trading activities today, we want to be on standby to capitalize on the next big move. And in preparation for today's trading session, I have done my due diligence. I've done a well-defined analysis of the current market conditions using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights so that we can unravel the potential direction of price action for today. So I encourage you not to miss out on any of the insight we will be talking about today. So grab your cup of water, biscuits, whatever you have, and stay tuned in and let's get this session started. For those of you who are joining us for the first time, you are very much welcome. I'm very excited to have you around with us this morning, and I'm very, very sure you will be asking, what is this all about? Well, the Extreme Speed Live platform is a platform where we as technical traders gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. The session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I do recommend that you stay tuned in during the course of the session so you don't miss out on the insights that we will be sharing today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and of course encourage you to actively engage in the comment sections, as the more you can engage with us, the better you will become by asking more questions. So let's dive right into the business, as that has been said. So as usual, the first thing we normally do is to check on the economic calendar, and of course you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we've been monitoring since the beginning of the week, remember we have been monitoring four major assets, which includes the US Oil Spot, the New Zealand USD introduced to us by Ricey Rick. We also have been monitoring the XAUUSD, and of course the USTech100. Now, based on this asset we have on our watch list, we will be focusing on economic features from both the United States, United Kingdom, and of course the New Zealand economic docket. Now, if we take all this into consideration, for today, Friday, November 24, we have two high impactful events, all of which are coming in from the United States economic docket. Now, the two are S&P global publication, which will be comprising the manufacturing PMI and the services PMI. Now, for those of us who don't know what the S&P global publication is all about, well, these publications cover a wide range of topics, including market trends, credit ratings, economic indicators, and industries insights. Now, the information here provides us valuable data to investors, financial professionals, and businesses, helping them to make informed decisions and stay abreast of market development. Yesterday, we had a couple of S&P global publications from the United Kingdom, which actually came in beyond expectations, giving us some positive outlook on the United Kingdom. And of course, we saw how the pound sterling reacted to that event. Now, today, we are looking forward to the US publication as well. Now, the manufacturing PMI gives us an insight into the manufacturing sector of the United States, and of course a reading above 50 indicates that the manufacturing economy is generally expanding and a bullish sign for the US dollar. Now, if you look at the previous data for the manufacturing PMI, we saw for the month of October, we saw the index came in at 50, which was just right spot on a positive signal for the manufacturing sector. However, we can see economists are projecting a 49.8 for the month of November, which is a sign that there is expected to be a little bit of contraction in that sector. So we look forward to see what the actual data will be on that one. Then later on, simultaneously, we are going to be looking at the services PMI, which reflects the change, if any, in the current month compared to the previous month of the private sector's companies from the services sector. And of course, a reading above 50 indicates that the services economy is generally expanding and a bullish sign for the US dollar. Now, if we look at the previous data for the month of October, it came in at 50.6, and we have economists projecting 50.4 for this month. Another little bit of contraction there is expected. So we look forward to see what the actual data will be on that one as well. However, as technical traders, we do know that the anticipation of this event usually affects the market sentiment, and on the long run, we shall be seeing this reflect on the chart as price action. Now, talking about price action, let's dive right into the business and let's see what is going on from a technical standpoint. Now, the first asset we are going to be looking at for this week is going to be the US oil spot. And in fact, we've done pretty well on the US oil spot since the beginning of this week, as we were able to scoop in close to 1,000 pips in profit on this asset. Remember, we had some huge sell positions on Wednesday's trading session. Well, amidst yesterday's holiday season, the market experienced lower liquidity and volume, leading to a range-bound scenario over the last 24 hours, as you will see here, which never came to us as surprise at all, since we had the US public holiday yesterday. So the US market was actually closed for that period. However, in the Asian session, we saw oil prices showed modest gain, fueled by OPEC Plus confirmation of the upcoming meeting on November 30th. Now, remember that we talked about this a couple of days ago, as we saw an unexpected shift and postponement in that meeting from November 26th that it was supposed to happen to that 30th, which was shifted to, and this resulted in some uncertainty in the market, leading to that huge significant breakdown we saw there. Then also we saw a huge stockpile in the US crude oil, which also led to an increased supply in the market, which of course we know when there is a high supply in the market, price usually drop, and that was what we saw that happened here. Now, with the situation we have here and looking forward to today's US S&P Global PMI data, participants in the market will be seeking potential trading opportunities centered around this event. Now, in preparation for today's trading session, how do we intend to capitalize on the next move? But before we go into the detail, I would love us to run through how the week started, especially for those of us who missed out on our earlier sessions. Now, at the beginning of the week, we saw here our price was initially confined within a range, and that was between the $76.80 level and the $75.90 area, which emphasized some level of uncertainty going on around that area. Now, we talked about the potential of a breakout of that structure. Remember, we had the buy stop order above the $76.80 area, which we got triggered during our live session on Monday, and then we had the privilege of joining this 160 pips move into the highest point for this week at the $78.40 level. And of course, you know how we do it. When price moves significantly well in our favor, we move our stop losses and secure the position. However, it was observed on Tuesday early days of Wednesday that price action was the market was witnessing some selling pressure, and we were actually thinking that this sell pressure will be a retracement where we are anticipating an uptrend move. But the inability of buyers to gain momentum to break out of the $77.95 level negated our idea of buying. Remember, we bought, and I did tell us on Wednesday that we should move all stop losses to break even, as the tendencies of sellers could come in at any point in time. And with that in mind, we capitalize on this bearish momentum at the breakdown of the $77.10 level, triggering our first sell position for the week, and we continue to ride the momentum all the way to the downside, adding more positions at the breakdown of the $76.80 level, and of course the $76 area, scooping in over 800 pips from 3 sell positions on that one. And for those of us who have been part of this profitable journey, well done, and kudos to you for being on standby to capitalize on this move. Now, in the last 36 hours, we have remained inactive in this market. As you all know, we talked about this scenario yesterday after observing the consolidation where price was confined within the $76.80 level and the $75.90 area. And we said here that we will not do anything unless price action breaks out or breaks down the structure. Now, we said yesterday that it's looking as if price will continue to the upside, and we were looking forward to price breaking out of the $76.80 level, which of course did not happen. Though we saw price break down the $76 area a little bit yesterday, and if you remembered what I said yesterday, I said here that considering the potential of a bullish momentum, that we do want to be seeing a significant confirmation that truly the sell momentum will continue. And what I said was that we want to see some lower lows and lower highs on the lower time frame before we want to be joining any bearish momentum, which of course never happened. Now, in the case scenario we have here, we do not have any positions running at this point in time. Now that we are heading into the last trading day of the week, how do we intend to capitalize on the next move? Now, for us to capitalize on the next move, I would like us to revisit the higher time frame so we can have a holistic perspective into what is going on in this market, and at the same time give those who missed out on our earlier editions the privilege to be on the same page with us. Now, when we scale up into the 4 hours time frame where we started our analysis for this week, we saw here, okay, we took into consideration the nature of price action in the last 3 to 4 weeks. And in fact, after doing that, we were able to identify a descending channel. Now, what we did here was to connect the series of lower highs, which gave us the resistant line of that descending channel. And we also connected a series of lower lows here, giving us the support line of that descending channel. Now we had a beautiful structure to guide our trading decisions for the week. Now something interesting happened at the beginning of the week. Let me zoom right in as we saw price action finally break out of both our key level at the $76 area and of course the resistant line of that descending channel to signal an uptrend move. Now, you know how we do it in this community. Whenever we identify the breakout of a structure like this, we do expect that at some point in time, price is likely going to come back to retest the structure that was broken in anticipation of another wave of bullish momentum. Now, if you look at what has been happening in this market since the beginning of the week, you will see that price action came back really into that structure, and immediately came into that structure, we saw an engulfing bullish candle spring out of that area, bringing price back into that range where it started the week, between the $76.80 level and that our key level. And since that time, in the last 48 hours or so, you will see price action has been trading within a range in that regard. And one of the things this tells us is that there is a level of uncertainty going on in the market, as majority are not sure of what will happen, especially after mixed fundamental development that's drives these market conditions. Now, with the situation we have here, you know how we do it in this community. Whenever price action falls into a range like this, we usually exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, if you would ask me from my own sentimental perspective, I'm of the opinion that there are chances that price will continue to the upside after giving us an engulfing candle right at the retest of the trend line that was broken earlier this week. Then another thing I also took into consideration here is the character of these candles around that key level at the $76 area. You will see that we have been noticing sharp rejection of the structure in the last 2 to 3 days, and in fact yesterday's trading session we saw a hammer candle around this area. Now, what this simply tells me is that sellers are finding it difficult to settle below the $76 area, which for me is a sign that buyers are gradually gaining momentum behind the scenes. Now, if we scale back down into the 1 hour time frame, we will begin to see things more clearly. Now, let's scale back down into the 1 hour time frame. Now, look at what is going on here on the 1 hour time frame. Now, price action in the last 2 days has been ranging between the $76.80 level and the $75.90 area. Now, this range here was where price action started this week. Remember, we also had that same range happen at the beginning of the week before price action finally broke out of the $76.80 level to trigger our first buy position for the week. And as a result of this, I'm beginning to suspect that we are at a crucial juncture in this market. Now, to further aid our decisions today, while trying to decipher what next will be the course of action, I was able to spot this ascending trend line after connecting the series of higher lows. Now, with this ascending trend line in place, we will be using this one here to guide our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable buying this particular asset. Now, in this case scenario here, I want to see price take out the $76.80 area for me to capitalize on that uptrend move. And if price continues to climb, breaking out levels such as the $77.10 area, $77.95, $78.40, and of course the $79 area, we do want to be adding more buy positions to our existing trade. So this is how I intend to capitalize on any potential bullish move at this particular point in time. However, in as much as we're looking out for buying opportunities above the $76.80 area, we cannot ignore the potentials of sellers. Remember, we had a strong bearish momentum on Wednesday, which moved over, let me see, from the $77.95 area over 360 pips, move to the downside, and we might likely be seeing price doing a retracement of that impulsive move, as you will see how the $76.80 and the $77 area has been a strong selling niche in this particular area. Now, if this leads into a situation where price breaks down the ascending trend line we just plotted here, then we want to start considering selling. Now, for me, if I want to sell, I want to wait for significant confirmations to happen, like a retest of structure, before I want to start joining a bearish move. And in fact, if that's happened, we want to be adding more sell positions if price action continues to drop, breaking down the 75 area. And in fact, if price breaks down the 74, which happens to be the lowest point that price action has been for this week, I will feel very, very confident adding more sell positions to my existing trade. So this is my view here on the US All Sport, and you would agree with me that we are at a crucial juncture, and how important the ascending trend line here is going to be guiding our trading decisions for today. So you do want to be marking out that range between the $76.80 and the $75.90 level on your chart, and include that ascending trend line, which will be a major parameter to guide our trading decisions for today. So these are my views on the US All Sports for today. So let's see how this will play out. And I encourage you to exercise patience and allow your structures to mature before you jump into any positions. So if you have any questions whatsoever as regards to the current setup, or you need me to shed more light on this, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, so I see a lot of compliments in the comment section. Thank you guys. Thanks for maintaining that energy. Smart Talk, Eric73, Jesus, Valerie, Cosime, I hope I pronounced that correctly, Moton9191. You guys are wonderful. Thank you for checking in. I see Opebalo here asking, please, can you explain how dollar fluctuation affects the pair, like the GBP? Whenever you have trading activity go on an asset, let's say for instance the GBP USD, at the point you are buying, selling is also happening at the same time. Now, if you are having an asset of the GBP USD, for instance, and you're buying the pound sterling, you are simultaneously selling the US dollar at the same time. So if you buy the GBP USD, what you're simply doing is buying the pounds with your US dollar. And if you are selling the pounds, that means you are actually selling the pounds to buy the US dollar. So I don't know if that's what you're trying to ask me to explain here. You said, can you explain how dollar fluctuation affects its peers? The rise in dollar, of course, will make the other pairs drop in value. So as the dollar rises, the pound, the pair in correlations with the asset also drops simultaneously. And if the dollar drops, the pair will definitely rise. I'm not sure if I answered your question. If that is not the case, kindly rephrase your statement so that I can have a better understanding into what you mean. All right, so in the absence of no further questions, Aki88, I see you. Thank you for checking in. So in the absence of no further questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and in fact in the last 24 hours we have been inactive as price action still remains within the range we identified during our live session yesterday. However, in general, we have been profitable so far this week on the US Tech 100 as we have been buying since price action broke out of our key level at the 15,580 at the beginning of the week. Now, for the sake of those who missed out on our earlier sessions, let's run through how the week started for us all in this community and what led to the decision of buying this asset. Now look at what happened here at the beginning of the week. We had a situation where price action was confined within the 15,845 and the 15,790 level, giving us a level of uncertainty going on around that point. And of course, you know how we treat our flat channels. We wait for price action to either break down or break out of that range to give us an opportunity to trade. Now, coupled with the fact that we had a range, we had this ascending trend line also marked out, which has been supporting the bullish momentum in the last 3 to 4 weeks here. And for the fact that price remained above that ascending trend line, we were looking out for buying opportunities at the breakout of the 15,845, which actually happened before our live session on Monday. And I told us on Monday that for those of us who missed out on the breakout of the structure, that we do want to exercise patience and see if the market will come back, retest the structure to join that uptrend move. Now, in that situation, we saw price break, came back to retest the structure as expected, and then we saw price continue to the upside. Then we also added more positions at the breakout of the 15,880, and of course we added one more at the breakout of the 15,970 level to maximize that bullish move. And on that single move, we were able to scoop in let's see together here. The first buy position moved about over 200 pips in profit, while the second buy position moved over 180 pips, and the third buy position moved about 100 pips. So we were able to make roughly about 400 pips. And as soon as the sell pressure came in, remember we moved our stop losses during the session on Tuesday to protect our positions against any sudden pullback. Now, on that same day, we talked about the potentials of sellers coming in. That is, if we see price breakdown retest the 16,015, we will join a bearish move, which we also capitalize on, and we rode that momentum all the way to the downside, as you will see here, giving us over 140 pips in profit before that consolidation phase happened. Now, during our Wednesday session, we begin to notice that sellers were actually finding it difficult to break through the $15,880 area, as you will see here, sharp rejection at every point in time. Then we saw higher lows here, giving us a sign that we might be seeing a reversal setup unfold. Now, with a reversal pattern on the chart, we marked out the neckline at the 15,940, where we said here on Wednesday's trading session that we want to see a breakout of the structure to validate that reversal pattern, and that was exactly what happened as we saw price skyrocket into the 16,125 level with over 100 pips in profit. And of course, we do move our stop losses accordingly before getting taken out of that positions at a reasonable amount of profit. Now, during our live session yesterday, we acknowledged the fact that price action is within a range that is between the 16,065 and of course the 15,970, and we said we will not be doing anything unless we witness a breakout or breakdown of this range, which obviously never happened till this present moment. And we are not surprised that this did not happen, as yesterday was a public holiday, and due to the low liquidity in the market, there was no real traction that could push price action in a particular direction. So at this point in time, we do not have any positions on the USTech 100. And as we get prepared for the New York session today, how do we intend to capitalize on any potential move from this current structure? Now, like I said earlier, any move today is going to be very massive depending on where the breakout happens, as we all know that days like this, days after public holidays, often lead to pent up demand and an accumulation of market orders, which could result in larger than usual trading volumes on days like this. So we do want to be on standby to capitalize on the next move. Now, the question is, how are we going to do that? Is price going to the upside today, or is it going to drop to the downside? Now, for us to have a better perspective into what is going on here so that we can make a well-informed trading decision, let's scale up into the higher time frame and refresh our memories as to what we saw at the beginning of the week. Now remember, we talked about this on a 4 hours time frame where we took into consideration the nature of price action since the last week of the month of October, and in fact it was very clear that price action has been on a strong bullish momentum. And to emphasize this, we had a couple of ascending trend line after connecting the series of higher lows, giving us something to work with. Now, in addition to those trend lines, we had very important key levels that we identified here. In fact, we had multiple levels, but the most important one for us at the beginning of the week was this 15,850, where we said if price breaks out of that structure, we want to be buying, and we did took advantage of these opportunities. We had this one, price came back to retest. We also capitalized on the second move as we rode it to the upside. Now, in the last 48 to 60 hours in this market, you will see that price has been ranging between the 16,060 and the 15,970 area. Though we had a little bit of a breakout of the 16,060 right here, but we saw selling pressure come in, now giving us a shooting star candle around this area, which emphasized the presence of sellers around this area. Now, with the situation we have here, and for the fact that price action just hit a new high, we know that it usually takes quite a lot of time before price action finally acclimatize with that structure. And whenever price finds new high, we see our market participant jitter, and we see the emotion of fear prominent as majority because of the new price area. Majority want to start closing in some of their positions, taking in profit. And whenever this happens around this area, we usually see price action go through consolidation phases, choppy situations, or even retracement move, which is peculiar with what we have been seeing here in the last 2 to 3 days. Now, with the situation here, the perspective still remains the same as what we said here yesterday, as we have no other choice than to exercise patience since price action still remains within that range between the 16,060 and the 15,970. Now, the only condition that will make us buy or sell here is for price action to either break down the 15,970 to give us an opportunity to sell, or we wait for price to break out of the 16,060 for an opportunity to buy. But the way things are going right now, it appears that sellers are gradually gaining momentum behind the scenes, making the 15,000 breakdown or the 15,970 much more likely. So let's see how this will play out. So we have a range already. So we maintain the bias from yesterday, waiting for the breakdown retest to sell, or the breakout retest to buy the US Tech 100 for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today's trading session. So this is my simple view here on the US Tech 100. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your charts. So I see a couple of comments here. I think Ope Palo has just rephrased a sentence, and he said here that, I mean, after news, if USD is bullish, what happens to all the USD peers? Now, first of all, I think I now get your question clearly. Now, first of all, it's important that you note that the fluctuations of the US dollar impacts its currency pairs, of course. Now, a strengthening US dollar generally leads to the depreciation in the value of its pairs. Now, let's take, for instance, the Euro USD. For instance, if the US dollar rises, definitely the Euro USD will drop. And if the GBP USD drops as well, that simply means that the US dollar is rising as well. So it's inversely proportional. So when the US dollar rises, the other pairs will definitely drop. Now, when you are relating this with the news, well, the news does not necessarily affect the value of the asset. It is the reaction of the market participants to the news that affects the value of the asset. So this is one thing you really want to understand. So the anticipation of the news, that is prior to the release of the news, we have the fluctuation in market sentiment in preparation for the news, and after the news there is an immediate reaction to the news. So it is not really the news per se that affects the value of the asset, but how the participant in the market feel about the figures released that drives the value of the asset. So basically, if there is a US dollar increase, definitely the other pairs will drop. So it's quite simple. I hope I've answered your question there, Opebalo. If you still have questions, feel free to let me know. Okay, Murphy G, thank you for your positive message here. Thank you very much. I wish you the same too as well. GJ, I don't know if I pronounced this correctly. Hello to you. How are you doing? I know you know what I'm talking about. Okay, Opebalo. All right, you're very much welcome. Glad I was helpful there. So in the absence of no other questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the New Zealand USD, which was actually introduced to us by Rick. I don't know if Rick is still around. I was mentioning his name yesterday, but he never responded. I guess he wasn't around yesterday. However, based on what we have on this asset, you will see that since the beginning of the week, the nature of price action has been very, very choppy, and the absence of the US involvement in the market yesterday had also made the price action stagnant for a while, as you will see here that price action has remained confined within the 0.60650 and the 0.600 area since the beginning of the week. But it appears that the bullish momentum is gradually gaining momentum behind the scenes. We, of course, know that the dollar at this moment is weak presently based on the economic factors we have been witnessing since the beginning of the week. And it was not yesterday. Okay, during the course of the week, we saw how the Fed's hawkish comment as regards to the potential of another interest rate hike, and this has really caused a dichotomy in the market where majority of participants are divided amidst the potential interest rate hike and the rate cut that is expected to start at the early of next year. So everyone is still not sure of what really is going to be happening. But we had some positive data from the labor sector from the United States, and of course the CPI data too came in very, very positive. These are very important events that usually affects the sentiment that drives the US dollar at this point. But if we look at the structure here on the 4 hours time frame on the New Zealand USD, it is clear that since Tuesday of last week's trading session, price action has maintained a bullish momentum, and in fact we have an ascending trend line to guide our trading decisions. And we mentioned this yesterday that as long as price remains above that ascending trend line, we shall feel comfortable buying this particular asset. And remember that during our live session yesterday, I did mention that we want to be marking out the 0.60650 levels on our charts, as if price breaks out, retests the structure, we want to be considering buying this asset. So we're looking out for buying opportunities above the 0.60650 area. However, if price action drops below the 0.60410 level, which interestingly shares a beautiful confluence with that ascending trend line, we do want to be looking out for selling opportunities. And to sell, we want to see a breakdown, retest of structure, confirming that buyers are finding it difficult to climb back above the ascending trend line, after which we want to be joining a bearish momentum to the downside. And in fact, we have multiple levels that we can look out for new selling opportunities if price action ever breaks out of those structures. So the center of focus for today's trading session is basically between the 0.60410 level and the 0.60650 area, where depending on the direction of the breakout of this range will be determining where price action will be closing for this week. So you do want to be marking out these levels on your chart and ensure that you allow the structures to mature before you jump into your positions. And please remember your stop losses, very, very important. If we are buying above the 0.60650, stop losses should be way below the support line here, which will be dovetailing to between 20 to 30 pips depending on where your entry is. And if you are selling, you want your stop losses to be above the 0.60650, which also will be dovetailing to between 20 to 30 pips depending on where your entry is. So let's mark out these levels here and see how this is going to play out in the next couple of hours. So these are my views on the New Zealand USD. Very simple setup here. Mark out those levels and let's wait for structures to break out before jumping into any positions. So if you have any questions on the New Zealand USD and you need some further clarifications to an aspect you really do not understand, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as always to see if there are any questions before we move on to the last asset on our watch list for today. All right. So, in the absence of no questions, I see your comments here. Aman Lovely, Jenny Ho, Nadebua, good morning to you guys, and glad to have you around with us this morning. So, in the absence of no further questions, I want to move on to the next asset on our watch list. So the next asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And so far this week, we've done pretty well as we've been able to scoop in around 3 to 400 pips on the initial buy positions we took at the beginning of the week, and not until yesterday, Wednesday stroke yesterday, we begin to see some selling opportunities, which we actually took advantage of. And of course, yesterday's sell position struggled to gain traction, grappling with the challenges posed by low market liquidity during the US Thanksgiving holiday. Despite this, the precious metal managed to secure modest gains, especially during the Asian session amidst a weaker US dollar. However, the ascent lack sustained momentum, leaving gold prices below the psychological level at a $2,000 mark as sellers faced resistance in breaking down the $1,990 area, which we identified earlier this week. Now, amid signs of easing inflationary pressures, the release of more hawkish FOMC minutes that happened on Tuesday, and upbeat US labor market and consumer sentiment data suggest that interest rate could stay higher for longer. Now, this development may limit the potential of gold, and we do want to be taking this into consideration while we review the current market structure. Then another thing that could be amplifying the potentials of the US dollar here is the recent uptick in the US Treasury bond yields, which we saw in the last 12 18 hours, has been gaining some momentum, recovering, let me say. And at this point, we are the division between hawkish Fed sentiment and global economic uncertainty, and this is likely going to continue shaping the dynamics of this particular market. However, if we look at things from a technical standpoint, it is more or less a consolidation at this point in time, and we need to exercise a lot of patience for us to be able to capitalize on the next move. Now, before we go into the details here, for the sake of those who missed out on our earlier sessions, let's quickly run through how the week started for us all in this community and what led to the decisions that made us to buy the XAUUSD at the beginning of the week. So the first thing we saw at the beginning of the week was the fact that price action was initially oscillating just right around our key level at the 1,980. We saw buyers push price above this level for a while. Then we saw sellers push price below the level for a while, making price action confined within the 1,985 and the $1,973.50 level for the first 12 to 13 hours of the week. And of course, you know how we do it. Whenever we have this kind of range, we either wait patiently for price to break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, coupled with the fact that we had a range identified, remember that we had an ascending trend line after we captured the series of higher lows since last week Wednesday, giving us this ascending trend line to work with. And with this ascending trend line in place, we were actually thinking that price would climb up. But during our live session on Monday, we saw our price did break down this ascending trend line, giving us a sign that price may likely drop to the downside. And as a result of this breakdown of this ascending trend line, we decided to position ourselves below the support line of that range at the $1,973.50 level to capitalize on the downtrend move. And we saw price break down that structure really and moved over 80 pips in our favor before the bullish momentum came in to take us out of the position. During the same live session, we emphasized that if price action takes out this descending trend line at any point in time, that a breakout of that key level that we situated at the 1,980 will welcome buying opportunities, and with a buy stop order sitting above that structure, we capitalize on this momentum all the way into that highest point at the $2,007.50 level, capitalizing on over 250 pips on that single one. And remember that we had multiple entries like the breakout of the 1,985, 1,990, and of course the $2,000 mark to maximize the potential of that bullish move. So as at the first couple of days of the week, we were significantly profitable on the XAUUSD, scooping in over 300 to 400 pips in profit on that one. And for those of us who are part of that profitable journey, well done and kudos to you. However, after this development of that bullish momentum, we begin to notice that buyers were finding it difficult to find new highs, as we saw the highest point for this week was around the $2,007.50 level, and the next attempt by the buyers to break out of that structure was limited around the 2005 area, giving us a lower high in that regard. And usually when we observe a lower high in the market structure, this is a sign that sellers are gradually gaining momentum behind the scenes. Now, this is where it got interesting on Wednesday's trading session. We begin to notice that price action was gradually transitioning into a reversal pattern in the form of a double top structure. Hence, we had our neckline around the $1,996 level, which interestingly shares a beautiful confluence with this ascending trend line we marked here. And we were looking for the price to break down both the neckline and the ascending trend line to give us an opportunity to sell. And I did mention here yesterday that for those of us who missed out on that one, that maybe price action will be coming back into the structure to retest it and incite a downtrend continuation. And this led us to position ourselves just right below the 1,996 level yesterday to capitalize on that downtrend move. And as you will see, due to the low liquidity from yesterday's trading session and the sudden dichotomy, division within the uncertainty, to continue the uncertainty around the hawkish Fed sentiment and the global economic situation, we have the gold to gradually gain momentum, especially during the Asian session. And if you had moved your stop loss, I do hope you moved your stop losses accordingly. If you do, you must have been out of all the sell positions now. And if you had not moved your stop losses, well, I will advise you to close all sell positions at this point in time, as you will see that sellers have been finding it difficult to break down the $1,990 area since the beginning of the week. And for me, this is a sign that buyers are still have a say in this particular market. Now, with all positions closed here, what are our plans for today's trading session? How do we intend to capitalize on the next move? Well, if you would ask me, and looking at what has been going on here since Wednesday's trading session, it is very, very clear that sellers are finding it difficult to break through this area. And in fact, if you look at the structure closely, you'll see the lowest point in the last 60 hours has been the 1,990, and since then, this subsequent attempt by seller to break through has transitioned into series of higher lows. As you will see here, price action gradually continue to find higher lows here, which reveals that buyers are gradually gaining momentum behind the scenes. Then another thing that we also want to take into consideration here is the fact that price action in the last 60 hours has been confined within the range around the $1,996 and the $1,990 area to emphasize the level of indecision in this particular market. And of course, you know how we do it in this community. Whenever price action falls into a range like this, we want to exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Now, in addition to this range here, you will see that since price action found new highs around the $2,007.50 level, price action had gone through a series of lower highs to reveal the character of price action of sellers in the last 2 to 3 days now. Now, with the situation we have here, where we have been noticing higher lows, the chances that price action will break out both the descending trend line and the resistant line of that channel we identified earlier increases. And look at how interestingly they share a beautiful confluence together. So if price action breaks out of that resistant line at the $1,996 level, price will also have broken out of the descending trend line, giving us an opportunity to buy and also telling us how the trend line may no longer have the capacity to continue to negate the bullish attempt. So for us today, break out of the $1,996 area, retest of structure will give us an opportunity to buy the XAUUSD, and in fact we have multiple levels such as the $2,000 mark, $2,007.50 level, and of course the $2,010 area to look out for more buying opportunities in this particular market. So that is how we are going to be managing our buy positions on the XAUUSD for this week. However, if price action drops and then continues to the downside, respecting that descending trend line one more time, then we do want to be considering selling only if price breaks down the $1,990 area. Now, we do not know what will be happening during the beginning of the New York session. Remember, I did tell you how we are likely going to be seeing some pent-up demand and, of course, accumulations of market orders ahead of the New York session today due to the public holiday that happened yesterday. And during the first couple of hours of the New York session, there is a chance that we will be seeing some increased volatility in this particular market. So let's see how the market will react to the structure. Let's see if we are going to be seeing a breakout of the $1,996 area, which for me, I think that is going to be what will happen to capitalize on that uptrend move. Let's see if it is possible for us to even sell before the breakdown of the 1,990 will happen. Now, let us look at the series of higher lows that has been observed here. Now, if we connect the series of higher lows, I think we have an ascending trend line, which I will call a temporary one in the meantime. So let's bring out our candle chart and look at what we have here. So if it so happens that price breaks down the ascending trend line, then we might be seeing a situation where the descending trend line will be respected one more time to push price to the downside. So even if the breakdown happens, please and please don't get too excited. Let's wait for some confirmations to happen, like a retest of either the trend line or the $1,993.50 level before we want to be joining a decline to the downside. So this is how we are going to be managing our positions on the XAUUSD today. So our center of focus for today is basically between the $1,996 level and the $1,993.50 area, where depending on the direction of the breakout will give us an insight into where price is likely going to close for this week. And please remember that whatever breakout happens here is going to be leading to a massive move to either upside or downside. So we want to be on standby to capitalize on that move. So these are my views here on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will take the next 10 to 15 seconds off to see if there are any questions, after which I will come back to round up for today's trading session. All right. So in the absence of no questions, I'll take this as a confirmation that we are all good to go and that we've all marked out these levels on our chart. So it's on this note I would want to wish you the best of luck today. It has been a wonderful moment with you guys, as I really enjoyed every single moment. I love the positive energy, and very grateful for that one. And today we were able to attend to 4 major assets which we have been monitoring since the beginning of the week, which includes the USOILSPOT, the USTech100, the New Zealand USD, and finally the XAUUSD, popularly known as the gold spot. And so far this week we've done pretty well across the assets on our watch list, and let's see if we can build on what we've had so far this week during the New York session today, based on the structures we've identified today. So we have simple setups that we will be using to guide our independent trading decisions for today, and I do hope that you are able to mark out those levels on your chart, and let's see how the market will react to these levels. Now remember, always allow your setups to mature before you jump into any position. It is very, very important. Then another thing that is very important is that you want to be having a well-defined risk management strategy that will be consistent with all your positions from your portfolio. Remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. For those of us who joined for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I want to encourage you to be part of our subsequent editions, as the more time you spend with us in this community, the better you will become in understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have done and also get prepared for the fresh new week on Monday morning. So I see your comments, Opebalo. You're very much welcome, and I look forward to seeing more of you. Julian RNX, you're very much welcome. 1057828. You guys are wonderful. So on this note, let's round off. I wish you a wonderful weekend. I wish you best of luck today. Trade smart, trade consciously, and do have a wonderful evening. Good night, happy weekend, and bye bye.